Hey everyone, welcome back to another portfolio update video on the channel. Portfolio is currently sitting at $8,663.86. For the day, we are up 102.57 or 1.2%, up 628 after hours. For the week, we are up 1912 or 0.22%. For the month, we are down 228.10 or 2.57%. For the 3 months, we're up 779.76 or 9.89%. For the year to date, we are down 343.19 or 3.81%. For the 1 year, aka the all-time chart, we are still up, and we are up $350.20 or 4.21%, which is not bad. But yeah, so still up on the all-time. Had another green week, just barely squeaked out green, with a low of being down about $190. But we were able to recover by the end of the week, which is pretty good. But yeah, let's go over the positions here. So currently I have it on your equity. I'm going to set it to total return. You can see basically all these positions are profitable, and I was also able to close out all of last week's options positions for a complete profit. So we're doing really good right now. I'm becoming very aggressive with selling options, much more than I was before. And I'm following, I don't know if you guys, I'm sure you do, if you watch TJ the Wheel Deal. He's another wheeling YouTuber who trades with a couple million in Robinhood, and he does a similar he does this strategy. I'm kind of following his approach, where he essentially finds some sort of stock he wants to wheel. He sets different levels that he wants to acquire the stock at, and then he simply just sells puts at those levels, trying to get assigned. So I'm taking a similar approach, and what that allows me to do is to sell much more aggressive cash secured puts and covered calls, which allows me to collect a lot more premium, which I'll go over in just a second. But just to get started here, once again, we are on total return. We got the MPW call credit spread, which is at full profit. You can see 100%. We have the Riot $10 put, which I opened on Friday, which is currently up $1. We have the SoFi $7 put, which I opened this week, which is currently up $4. We have two SoFi 650 puts that I've had for quite some time now, which is up $6. We have the TSLL 1223 strike call, which is up $32. We have the TSLL $10 put, which I opened on Friday, which is up $3 already. We have a Riot 750 put, which I opened on Friday, which is down $1. And we have the SoFi $11 call, which is up $8, which I've had for a while, and the CVE call credit spread, which I've had for a while, which is also up $10. And we can also see, if I go to equity, you can see this Riot, or I guess maybe better to go on price. This Riot put that I sold to open has 41 cents worth of credit on it. This SoFi $7 put has 8 cents. Just for some of these new positions, let's see, TSL $10 put has $15 on it, and that Riot 750 put has $6 on it. And you can also see pretty much all of these are set to expire this Friday. So everything above this contract, so 1, 2, 3, 4, 5, 6 contracts, I guess 7 because this is 2, are all set to expire this Friday, which means we are owed all of this premium by this Friday, which is insane. Because if you tally up all this premium, matter of fact, I can actually do that real quick. Pull up the calculator. We got 41 plus 8 plus 6 plus 23 plus 15. So we are currently owed $93 in options premium by this Friday, getting assigned or not. So whether we get assigned or whether it expires worthless, we are still owed that $93 regardless, which is a lot of money considering it's 1 week out. But yeah, so you can see I'm starting to dip into Riot a little bit, and I'm starting to dip into TSLL more, as well as SoFi. In terms of actual share positions, you can see I've trimmed down my SPLG position by quite a big margin, and that's because SPLG has just been rallying. It's at a new all-time high, which is crazy. Like you can see, it's at 56.74, which is amazing. Then that's obviously a new all-time high. I have nothing against the S&P 500, but I feel like, considering it's at an all-time high, I don't know how much more room it has to run. Even if it has a lot more room, I feel like I would much rather allocate my cash to some of these positions currently, and that's just a standpoint I have right now. I definitely did not feel like this before. I do feel like it now, though. Especially SoFi, considering the earnings coming up very soon. But yeah, so that's why I trimmed this position down, so I'd have cash to sell more cash secure puts and to basically get into these 3 stocks at the prices I want to, and I'll go over that in a second in my rentals spreadsheet. But yeah, other than that, I have an additional share of TSLL and 1.25 shares of Riot. My current plan is that all of this premium I generate will be reinvested back into that stock. So, for example, Riot, I sold this put for $42, as you can see. So when this expires worthless, if it does expire worthless, I should say, if it does expire worthless, and when that does happen, I will reinvest all $42 back into the stock. That way I get some growth. So this will buy me around 4 shares of Riot if this expires worthless. So that means come this Friday, if I can close this contract for full profit, I will reinvest all of that money into Riot at whatever price it's at when it expires. And what that allows me to do is not only build a position while I'm not assigned yet, so if it's dipping, or it's rising, and I'm making premium, I can still like get in on that rise by reinvesting that options premium. Additionally, if I do get assigned, let's say I have 100 shares, but I can reinvest that premium at whatever price it's at. That way, if I get assigned on a covered call, but the stock continues to run, I have that odd lot of shares that'll continue to run past the covered call. So it basically allows me long-term growth outside of the aggressive option selling that I'm doing, just in case we get into a bad situation where, let's say, the stock continues to drop over time. I can lower my cost basis by just reinvesting premiums, or if the stock continues to rise over time and I get called away on shares, I'll still have an odd lot that'll continue to grow. So that's the idea behind that. It also allows us to eventually generate more premium, because if we can build up 100 shares of Riot from simply just selling options, that means we have another covered call, another cash secured put, whatever you want to say, that we can sell. So that's the idea behind that. So come expiry of this week, we have quite a lot of premium that we'll need to reinvest into shares, which I'll be doing at the end of the week. But so far from that reinvestment strategy, I've invested 1 share here and 1.25 here. So that's pretty good. But yeah, let's head over to the rental spreadsheet. Here is where we sit at currently. We've collected $70 on SoFi so far. You can see a lot of plays recently collecting much more premium and not having any of these negative returns. Before I was much more fearful in selling cash secured puts because I didn't want to get assigned at all. So I was selling these really long dated conservative strike puts, but now that I'm looking to get assigned at different levels, I'm really selling much more aggressively, and that's not only allowing me to collect more premium, but I'm still not getting assigned that often, which is kind of crazy. So I think this is much better than what I was doing before. TSLL, we've already collected $85, and it's been like 2 weeks, so that's pretty great. Riot, so far we've already collected $59. It's been about a week, so that's really crazy. So quite a lot of premium brought in here. You can see I'm tracking it by how much I bring in each week. So far we have a total of 170, which is on average about $50 a week, which is really good. You can see I'm just doing some stats. I don't expect to obviously maintain a return like this over a long period. This is just a good opportunity in terms of time. So that's why these numbers look so crazy, because you can't expect a return like this. But yeah, so let me go over my whole price target thing. This is what TJ the Wheel Deal does. He calls them his bullets. He says oh, I'll put 1 bullet here. So it's essentially just lining up what strikes I would buy shares at is the idea. So let's say with SoFi, $7 strike price for 1 contract, $6 strike price for 2 more contracts, $5 strike price for 2 more contracts. So the idea is, here's the price that I want to buy at, here's how many shares in terms of contracts that I want to buy, and then I'm color coding it by having already been assigned, having an open contract currently, waiting for more cash to be available, or if it's an inaccessible strike in terms of premium, I have that too. But you can see, using this method, I have an open contract on SoFi at the 7, open contract on TSLL at the 10, open contract on Riot at the 10, and an open contract on Riot at the 750. So these are currently the cash secured put contracts I have open at these price targets. And here's where I've already been assigned, which was on TSLL, obviously. And these are the other places I hope to get assigned over time. And I'm thinking of adding Palantir too. But until I get assigned at these strikes, I have no plans on selling my remaining SPLG because, cash secured puts don't take up margin interest. So until I get assigned on any cash secured put like these, I have no plans to continue to sell SPLG unless I need to free up cash to either buy shares or if these strikes become available and I can sell at these strikes, then I will sell my SPLG, or at least some of it, to account for that. But I am still sitting at a nice 100 shares, so we still have quite a lot of exposure to the overall market. But yeah, so those are my price targets. So what I'm doing is I'm basically just, whenever an option expires on, say, SoFi, I'll check my list. I'll go, okay, I want to buy it here, here, and here. I'll open the options chain, see what I can get for these different strikes, see how much cash I have, and then I'll just sell it. It's as simple as that. If I get assigned, turn around and sell covered calls very aggressively, like I'm doing on TSLL, which brings in even more premium. But yeah, so following the TJ the wheel deal kind of methodology behind this, seeing how it goes, experimenting a little bit. I know this is quite different than what I've been doing. I've been very conservative with only investing in SPLG and SoFi. But just recently, I'm looking to bring in more income and to experiment a little bit more, take a little bit more risk. So that's what I'm doing. And once again, selling these contracts, I reinvest all of that premium back into the shares. So eventually I can build up another 100 shares, and then I can still cover calls on that, and I can build up another 100 shares. That's way down the line, but that's just an idea. But yeah, so that's the plan right now, and so far it's been working. I've pulled in a crazy amount of premium so far, and just like the past week too, $74, $89. That's a lot of money just bringing it through the door. And I mean, I can just keep doing that every week. TSL is bringing in about $50 every 2 weeks. Riot is bringing in about $50 a week. SoFi is bringing in like $15 a week. And that's not to mention, and that's just on the covered call side of things. Once I get shares on Riot, obviously. But on these two, that's currently covered calls, and then I guess cash secured put for SoFi. But yeah, so just taking a much more aggressive approach to my options selling, experimenting a little bit. Still having that exposure to the S&P 500, of course, but just trying some new stuff out. Looking to acquire a lot more SoFi, though, with earnings coming up soon, set to announce profitability for their first quarter. So hopefully they can do that, and we get some sort of rise in the stock. I'm not currently selling any covered calls against my shares, except for the very conservative 11 strike call, which is way out of the money. And that's because I expect an increase in the share price coming after earnings. So I'm not looking to tie up these shares at a low strike price because I want that full growth past this recent high if it gives it to us. But yeah, so that is pretty much everything. Tune in next week to see which of these options expire, because we have quite a lot that are just set to expire this week. And then you can also come back and see, did we end green, did we end red, how many more shares were we able to buy with these premiums. But yeah, thank you for watching, and I'll see you in the next video. Goodbye.